Welcome and thank you everyone for joining us for another Twitter Space. Today is August 19th, 2022, and this is episode 29 of the ledgerscale Internet of Value Open Forum. Now, ledgerscale Foundation was founded with two goals in mind. One, we want to provide educational services to not only our community, but to the entire digital asset community and to help scale up the number of brains that understand how distributed ledger technology works. And two, we intend to one day run hardware to provide infrastructural support to the distributed ledger uh, networks that we believe are ESG friendly and running a form of decentralized consensus. We host these spaces Monday, Tuesday, Thursday, and Friday starting at 3:30 Eastern Standard Time. And on Wednesday, we host a focus topic space from 5 to 6 Eastern Standard Time. If I could just ask if everyone could give us a follow on Twitter at ledgerscale and turn notifications on so you know when we're going live. And as well, if I could ask if everyone could hit that bubble at the bottom right and give a like and retweet to the space so that hopefully not only people in the space today, but people in the future can find this information valuable.
Yep, thanks for that, Death. And yeah, we're here to engage the community. So please, anybody with a question, speak up. Just raise your hand, and I'm sure if you're curious about something, somebody else is wondering the same thing. And it's an open forum, so just if you do speak up, please be cordial and welcome to the space.
What's up, Tony? What's up, Costa? How you guys doing today?
Just a good day, man. So I'm
Pretty good.
listening in. I'll be listening in and see what the community has to say.
How you guys doing?
I don't know if anybody got a chance to watch, but the Thinking Crypto Tony guy did both an interview with that Congressman Emmer and the SEC chair lady Hester. Those were interesting.
They had was it two separate videos? You mean?
Yeah, two full videos. One with her, one with him.
They were recent because I know he's had both of them on the show already.
No, yeah, both of them were recent.
Yeah, just yesterday and today.
Oh, awesome! I guess I'll go watch it and see the different takes they have from when they're on video a year or so ago already.
Well, the Emmer guy, you know how we've talked about in here that maybe we'll get some regulation next year. He kind of echoed that sentiment. And the Hester lady, she can't really say much, right? So he asked her some pretty pointed questions, but I mean, I understand she has to dodge the question. Like, she can't give a direct answer. I thought it was interesting, though. He asked her, hypothetically, in the future, if there's a security and a bunch of people get together and sue the SEC for, do it kind of basically, because he asked her about what the SEC thought about the 70,000 people with the John Deaton case. And she obviously can't speak to that. And so he was like, well, hypothetically, if there was like an AMC stock and a bunch of people, and she gave a little bit of a answer there. She basically said, like, yeah, we're aware of this new market dynamic. Which is totally weird. I mean, I don't think anything like this has really ever happened before.
I can't wait to see the movie.
I guarantee you there's going to be, if they made a movie about Facebook, this has all the intrigue, the money, the tribalism. I mean, this is a Hollywood story maker's dream. I mean, you've got drama and nonsense and illegal people going to jail, like the Silk Road guy, and Yeah, there's definitely going to be a movie one day. There's such a rich set of material. I would think it would be a Hollywood writers just you didn't even have to make it up. I mean, what do they say? Real life is stranger than fiction. I mean, some of this stuff is just it's crazy what's unfolded over the last 10 years.
I don't know if you guys got the same impression, but watching Congressman Tom Emmer's interview with Tony was pretty amazing to me, because there were points where he was like, I shouldn't talk and I won't talk about, ongoing litigation or whatever. He said the proper terminology, right? And then he gave insight in a different way that was still harsh. And I get it. A lot of, Congress is very politically or very polar right now as well, just based on party lines. But the fact that there are Congress people right now, or at least looking like they're trying to stand up for what's right, because, SEC just overreaching all over the place and just, suing everyone left and right because there's no clarity, is a wrong. That is not, I wouldn't say they're not providing the market what they need to be able to thrive. And so it's hit, I mean, we all understand that, but the fact that Congressman Emmer was still able to give, you know, very harsh criticism, not just the SEC, just this whole situation was, I don't know. Lately, I've been getting much, much more supportive of the fact that, like, I don't know anything else these guys vote on, like him or Warren Davidson, and I probably wouldn't agree with most things on them. But at the end of the day, in my opinion, they've done a pretty good job at least calling it out.
Yeah, he was saying, he was pretty stern about it. He was saying that, if the House changes over and maybe the Senate, that the oversight will, over like Gary Gensler, will ramp up significantly. What was the other thing he said?
Yeah, and I'll just quickly say, more than just calling them out, I think he's doing a good job of like crossing over the aisles between, parties and trying to get legislation drafted and pushed forward to the committees and all the necessary steps that have to happen before we can actually get some, legislation out of Congress for crypto. So I think that's the significant thing he's been doing for quite some time. I just hate that it all hinges upon the election, because none of us can kind of guarantee if they're going to take back the House and Senate to be able to do some of those things that they're talking about.
Well, that was the other thing he said, was that it's a bipartisan issue. I mean, and it should be. What the hell's partisan about this? I mean, this is about the country, not one political view or another political view. Like everybody on both sides of the aisle uses money, so it should be a bipartisan. Like, just think of the system as a whole. He did talk some about CBDC and the privacy, which I think is important. And there's solutions there in terms of how you design the system. That should be a bipartisan issue, though. I mean, how is there partisanship? I don't see the part. Well, I mean, the political people, they're going to argue about anything. So I guess there's that.
Yeah, at least from what I gathered, and obviously he knows them better. He knows his fellow politicians better than we do, because they have all the behind the scenes conversations and whatnot. His point today, from what I gather, was just that there's a lack of there's so much inaction on the side of one political party right now, which is hindering congressional ability to go after that. They have the oversight, but being able to call it out and to change the SEC's actions is really what I got from it. So hopefully that'll change here soon, and it doesn't matter about politics. At the end of the day, we all just want fair and just laws, that don't cripple the projects that we all are rooting for.
Yeah, I mean, it's funny how the two parties have diverged on this as a topic. I don't get it. This is the part. Even when I lived in DC, I mean, everybody wants to talk politics, and it's like I don't talk politics. Like, I don't just no. I'm in the dude. Tell someone in DC you work in the private sector, and they look at you cockeyed. Like, what do you mean private sector? Because everybody
Yeah,
works some sort of government or government contractor.
yeah. If you kind of look at it in the big picture, though, Karma, it's kind of the same old business that we've always had in politics. I'm sure we're not going to stay on politics long, but it's kind of the same old business. Like Republicans are more small government, less government intrusion, right? And Democrats generally favor like big government and more government intrusion. So I think if we just stick with that basic principle, they're kind of sticking to the same guns. Like Democrats still believe Big Brother kind of knows what's best all the time. So just it is what it is.
You know what's the one that's caught me off guard is Elizabeth Warren. I mean, she's come out really against crypto, but if you look at her record, she's generally like against Wall Street. And like crypto is a competitor, like it's a new thing that, these big Wall Street banks are gonna. Why do you think the Wall Street banks are pushing against it? So I would think that she would be, you know, for it if the big money center banks are against it. I would think that would fall, but she's in the reverse. It's weird. I This is why I don't like the politics stuff. Like none of the. I think they just argue because I don't know what, because it's just what they do.
It's all clickbait for them.
Yeah, yeah. I mean, here's a soundbite. There's a soundbite. Everybody gets a soundbite. Like I don't know. It's just.
Hey, quick question. What do you guys think about Brazil and Ripple's ODL corridor? Because that was big news to me. I mean,
Fair.
correct me if I'm wrong, but the company that they're partnered with is essentially the company behind the scenes of Western Union, right? At least that's what I gathered.
You may have
So
deeper than I did, but yeah, that's huge news.
yeah, I looked at them on the internet too. So they did have some connections to Western Union, but it seems like their connection is just kind of related to FX exchange, right? Because it seems like what they primarily do is foreign exchange of currencies, right? So it seems like Western Union may be using them to, facilitate those FX exchanges. So yeah, it depends on how big they scale this thing up. Considering that's what they do primarily, they could be a very big partner. We'll just have to watch and see how they scale up over time.
Yeah, they're one of the largest banks um, in Brazil. And they do a lot with the Brazilian treasuries and things like that as well. I think they hold.
Didn't I read that they primarily do FX? Like they don't really do, say, like if I want to go open a bank account.
Yeah,
To
it's not retail basing. I don't think. Yeah, facing. They might have an LLC that does, but I don't think they do directly.
Yeah, you're right, Carver. So it's foreign exchange and moving money for central banks. Like all of that is actually in their actual preview of what they do. So that's what makes them an exciting partner. We just have to see how they're going to be used. I think they're starting off small with just ODL to one particular corridor, but they said they expect to be expanding. So we'll just have to watch as they grow.
They're not the first ones though, right? In Brazil, because there's other ones. I think Banco Rendimento is one of them that they're also partnership. They have partnerships with the Ripple as well.
Right. So there are other partners in Brazil with Ripple, but they aren't announced as ODL partners, right? So they're just still part of the broader RippleNet community. This TravelX will be a specific ODL user, so they're actually using XRP.
Well, see, I mean, we were just talking about the SEC and stuff. I think if I read the article right, that there was some new, fresh regulatory clarity in Brazil, and so now they can start doing business because they have laws. So I think I read that. And don't forget Warren Buffett did a big injection of capital to a Brazilian bank that Ripple's entangled with down there as well.
Absolutely. Even Siam Commercial Bank, of one of the recent partnerships was affiliated with one of the new corridors that was opening up. But when I read a little deeper, they were saying that Siam Commercial Bank wasn't going to be directly involved in handling the funds, but they were somehow affiliated. So, man, this thing's growing and growing fast. So, yeah, even with prices going down, the utility is still kind of holding firm. I'm looking at the volumes in Brazil. It was generally about 300,000 in volume per day. We are up to 971,000 now, so it's almost tripled in volume. But I can't say that some of that volume is not because of the volatility and the price right now. So over the next few days, I'll be able to share with y'all if this volume is steadily increasing without this recent dip volatility stuff, and I'll be able to give y'all some more information. But I am watching the volume.
Is because that's almost a 3x increase. Is that over like a week or a month or 6 months or?
No, that was over the last couple of days. So yeah, the only thing is, like I said, I don't want to say it's all related to ODL because whenever volatility goes up, we do have a spike in some of these volumes because obviously people are trying to sell or buy low, so it kind of skews the volumes a little bit. But FOMO did find, I think, one of the actual partners exchanges that was dealing with the Brazilian fiat currency. So I'm watching his site as well to kind of keep up with these metrics.
Are you basically using the 3 XRP site to do your volume research?
I use a combination of FOMOs because at the end of the day, like he's the best I've seen in tracking these transaction volumes. But it does get a little intricate the way he presents the data. So I use a combination of his research and then the cryptocompare.com site that I have been using. So those are the two reference points that I'm using.
Yeah, it's interesting the way, I don't see him in here, that he presents some of the data. He doesn't present it the way a financial person would. It reminds me, I did an exam one time on some, it was something with some options or derivatives or whatever, and I flipped the X and Y axis. Still, the math was right and the answer was right, but I got it wrong because I put the Y axis on the X and I flipped it. He kind of does some things like that.
Yeah, that's why I said it's kind of high level, and it gets a little confusing. But he's literally pinging to all those APIs on those exchanges, and specifically targeting the ODL exchanges that he might think are involved. And so, I mean, he's doing an excellent job of actually tracking the transaction. So I give him a big shout out for his work.
Oh, he's doing great work, hands down. I mean, yeah, for sure. I don't know anyone that's doing better work than that. I'm trying to think. I guess maybe Ripple might have some stuff internally, but the old Ripple chart site was kind of cool. But see, it would crash once you started expanding out the topology, like the network graph. It would crash if you got too many. Like, say you had 2 exchanges, right? They're obviously going to have hundreds or thousands of or tens of thousands of wallets trusting them. As soon as you expand 2 of them, the thing would, go into like a loading, and it would just never render. It was too much information.
One thing I will quickly say is kind of looking at the volumes, and nothing is definitive, right? So I say that's why with a level of speculation, just looking at stuff that I do look at. But even with the volumes increasing, man, like at the end of the day, the traders and speculators are still the main drivers of the secondary price, right? So that's one of the reasons why I keep watching a lot of this stuff is I'm trying to see at that moment where, utility can kind of start to overrun some of the speculation volume and see what those effects are going to be, right? Because right now it's pretty clear that the speculators are still the main ones who are driving the car when it comes down to discovering price. So I'll keep up with it
Yeah,
and I'll let y'all know.
that sounds about right. I mean, and really, we've talked about this, but until you have regulatory clarity, you can't, in the US, you're not going to see, I mean, you might see, you're just not going to see that kind. And then I figure, okay, let's say like if they, boom, starting right now, there's regulatory clarity. Then I would think you're going to have, I mean, a lot of these companies have done a lot of work already behind, they just haven't turned, because they haven't, so they're already prepared, but it's still going to take them months to start ramping up. And then I would think you'd probably see, say, if you had clarity today, maybe like within a couple of months, like maybe 6 months, you'd start seeing some institutional players. And then maybe over the course of what's the word? Not proceeding. What's the opposite of proceeding? The next 12 months, you probably see like some ramp up from several other. And then maybe the second 12 months after that, you'll see the rest of the sort of institutional herd come in. I mean, these are big companies. They can't move that fast. But the thing is, I think it's going to turn into a gigantic, I mean, like a tsunami of liquidity. Like the speculator folks are small fish. I mean, they really are. And you've already got RippleNet, which I think of as like a ring surrounding XRP Ledger in the middle. So
let's
all
let's go let's go down your statement of retail speculators being small fish, right? I kind of agree with what your overall sentiment is there, but here's my thought process when I think about this kind of stuff, though, right? And we're just gonna use XRP as an example since we're mostly XRP here. But with what I guess 45, 49, I don't know what the current count is, I've lost count. Units in circulating supply, like that still gives retail a huge amount of units that are out there just circulating that could make still speculation a big part of this market until those assets change hands, right? Into somebody who's going to either be using them more, holding them longer, or whatever the case may be. So I think that retail is going to be significant in this until those assets really kind of get redistributed or something. So what is your take on that?
No, it's one of the things I'm most excited about because, like, look at the world today. And I've been watching this crowdfunding stuff for a decade, longer than blockchains existed. And in terms of, just consider crowdfunding like distributed, or we'll just call it crowdfunding. I think if there's right now there's no option. So like if you want to say move money cross border, you have to go to a centralized operator, whether it be your bank, Western Union, whatever. They set all the fees. They have all the connections and arrangements, correspondent banking, whatever else, or just they have their own branch over there. And so it's like they have all the pricing power. So if you, which I think what we're seeing set up here with with Ripple's liquidity hub is all of a sudden there's going to be a crowdsourced competitor or competitive method to just go into your bank or to Western Union or something. And so the crowd can set a price for liquidity that it's willing to accept. And all of a sudden you've got a counterweight to Western Union says it's going to be 10%. Right? If the crowd's willing to take 5%, well, you can go with the crowd. And now Western Union's like, oh crap, we're losing business. Maybe we need to, lower our price to become more competitive, or like maybe add more services along with or something to become more competitive. And I don't think that we've seen that type of a market dynamic where you have a real true, like the stock market is basically a crowd-funded pricing mechanism. So even if you're a big boy and you come in to buy, say, $1 billion of GE, or you're like a Warren Buffett or something, you're still not moving the price. Like, there's too many participants, there's too many people, there's too much liquidity. I mean, $1 billion is a lot of money, obviously, but you're still not moving the price, or you're not moving it that much. And I think that's a good, healthy dynamic to inject into the cross-border payment flow market. I mean, it is ridiculous, and I like the cost of it, because somebody said this. I think it was actually one of Ripple's guys. Maybe it wasn't. I don't remember who it was. But they were like, these are some of the highest fees per transaction. Like imagine if you go to pull $500 out of the ATM and it's like, oh yeah, 10% fee, there's $50. Like, what? I mean, you're going to think twice about using that ATM. But then these remittance people, and the guy's point was, the trouble is you're hitting the people that can least afford to pay those fees with the high fees. So, a lot of these people are just trying to like send their mom some money for like food and rent or something, and you're just hitting them with fees. I mean, even the like 3% credit card fees, like for the karma coverage business model, the fees were what killed it. That's what one of the main things that attracted me to the XRP ledger was, because the fees are so low that I can do a whole lot of little tiny transactions, like $1 from this person, $1 from that person, right? But you add up a lot of those, and now you got $500. But if you're taking 3% out of every transaction, it just kills the financial model. And
right. But follow along with me, Carmen. So I 100% agree. I think Ripple is already past the point where they've proven that a bridge asset, particularly one like XRP, right, is definitely going to reduce the cost of moving money, whether it's domestically or internationally at some point, right? So I 100% agree with you. But what I was kind of really alluding to is like and so the coin market cap says 49 billion circulating supply XRP, right? So what I'm saying is those are in the hands of retail holders already, right? And as they increase the volumes as far as utility, right, we know that they're basically, right, buying and selling at a net price. So those are just net trades at the end of the day. Even if the market makers were incrementally like creeping that price up right through the utility usage of XRP, if the 49 billion units keep extracting value every time price goes up 10%, right, and then knock it back down, or they wait 30% and they sell, knock it back down, there's still a lot of outstanding XRP that could keep the price suppressed as utility starts to grow, right? And that's what I meant. Like, until these assets change hands, right? They still could have a very big impact on suppressing price if people just keep selling.
I see your point. I think the AMM will have an impact on your point, because like it was always my plan to hang on until we can earn some cash flow off of the XRP. Well, the AMM is going to enable that without having to purchase the other side of the I'll just call it an order book. And so I think that and you got a bunch of people that are just going to hold, but I think that would be silly to hold. You might as well earn some revenue on your capital, right? That's reasonable.
And that's why I love talking to you, because you always hit the nail on the head, right? So building out those other products, right, and other use cases for XRP, I think at this point are really kind of what even Ripple is kind of relying on to make this whole thing work symbiotically between retail and institutional usage, right? Because that market maker provides more people that, like you said, not just constantly sell their XRP, but for lack of a better word, lock it up into a automated market maker where it then gets you a return. So it's not as just coming into the sales volume, as well as NFTs, carbon credits, and all the other things that they're trying to build, right? I think those are going to be the thing that really kind of attribute to price appreciation and adoption of the asset outside of just kind of the remittances alone.
Well, correct me if I'm wrong, but basically what you're talking about is the risk that the retail sort of speculator cohort of traders. So you got market makers and market takers. Market makers provide liquidity, market takers take liquidity. So you're concerned that the retail speculator cohort will just all of a sudden all become market takers and take liquidity out of the market.
I absolutely believe that, right? Because if we're just kind of looking at, the sentiment of most of the people in the community, you can kind of just look at it, right? I think if we even get around the $8 to $10 mark, hypothetically, I think you're going to see a lot of people taking profits. And so you probably will see that $8 range retrace significantly, right? Because of those profit takers. And we'll have to work back up from wherever it, goes down from that dip, right? And that's what I meant by as these assets change hands. Because my speculation is, let's say hypothetically we get to the $8 to $10 range, and a lot of these people who bought 30 cents and these recent prices start to take profits. Well, the market makers, the institutions who are probably thinking more long term will then kind of distribute those assets to the utility side or to the institutional side where they'll get put away for longer periods of time than just some of the fickle retail market, right? So I mean, that's just kind of my speculative view of it.
I think your retail people are more likely to put it to the side, like under the mattress, if you will. HODL, that's stupid, but whatever. Your institutional folks, they're going to churn it, like when you work in a restaurant and I don't know if you ever serve tables, but you want to turn your tables over, right? Boom, get another set of get another set of guests on that. Boom, get them out of here. Get another set, right? So they're going to want, because they're making money on the transaction flow. So they're going to want to turn that over, and that's where they're going to drive liquidity. The AMM aspect of it essentially would stand up like the crowdsourcing competitor to the crowdsourced pricing mechanism that could potentially compete against the institutional pricing. Because right now, I mean, you go to Western Union, they just tell you, hey, it's 10% or whatever it is. I have no idea what it really is. But, what are you going to negotiate with them? I mean, come on. You're sending what, $500? Like, they don't care about $500. They're just going to tell you to buzz off. In insurance, that's called a contract of adhesion. And actually, the law goes against you as the person who wrote the contract, the insurance company. So let's say there's a situation between a client and an insurance company, and it's legitimately, and I think this is the same actual situation with the SEC and the Ripple case. But let's say that legitimately from a legal, just perfectly scholarly legal point of view, that you're 50% right and I'm 50% right. Well, if I'm the guy that wrote the contract and you are not capable of negotiating, so it's a contract of adhesion, you win. Even though we're both 50-50 right, you win because you couldn't negotiate. Right? Which, I mean, that kind of makes sense, because if you can't negotiate, then versus with the AMM, the individuals there's like a crowd-funded way where individuals can say, hey, I'll provide you that liquidity. Right? Like they want 10%, I'll take 9. And someone else might come along and say, I'll take 8. Right? And so you get some more, I think, lively market dynamics there, which I think is healthy. for the
I just
system.
question your opening statement that the retail are going to put it at under the mattress when we start to see $8, $10, right? I'd almost like to see a show of hands from the audience of like how many people in this room will probably sell and take some profits between $8 and $10, right? Like I know I probably will, right? So uh, yeah, I just think that a lot of these retail people are probably going to be taking some profits at that point. And that's where the redistribute of the asset comes into play. Because even if you're right, right? And the institutions are going to use it to make profit off of, it still kind of gets thrown into that loop of utility, right? And not just like in the hands of speculators who are buying and selling off of sentiment and feelings, right? I think that's why we see so much volatility in these early markets is because retail is so fickle about their emotions and their money that, you know, institutions like Fidelity and BlackRock, like when they get these assets, they're pretty much off the market for, you know, decades upon decades, right? So that was my assumption.
So, hey, real quick, whether anyone's actually like looked up projections, so like the potential for the start of the next bull run, if it mirrors what like a 2017 type bull run did, then that's ambitious, right?
Personally, I don't think we have any sort of thing like that because of regulation. I think it'd be much.
Well, no. I was going to ask. So, like the projections that normally come back from people that are dealing with TA, daily, are fairly commonly saying somewhere around $10. Okay, cool. So after let's say it hits $10 and you have an 85% crash in the market. Has anyone played around with what the projections look like for like Elliott waves going forward after that and where price points will look? And this is all this is all speculation, but I just don't know if anyone's ever like tried to do that forward looking on what it would look like.
I mean, I personally haven't. I just look at I'm not a very technical TA person. I mean, I know some of it, but meh. It's to me, I just like to see the fundamentals of the market improving, the network growing, getting more connected, things like the AMM where liquidity can flow. That's just another way of connecting the market. Like these are all just fundamentally good things. And as long as I keep seeing that, I'm interested. If I start seeing stuff like, with other networks that I see, then I would lose interest. And I don't know. There's definitely some use to technical analysis for sure. I just find I consider it secondary to fundamental analysis. First you find the fundamentally sound idea, right? Then you can play with the technicals around it because you already know, like, let's say you make a technical mistake, right? And you buy in and the price crashes. Well, who cares? You fundamentally have a good business or a good investment. So you just hang on. Like I ran into that situation with one of my rental houses in the 07, 08. Like it crashed. I probably lost 30-40% of its value. I didn't care. I'm still making $500 a month. Like, what's my cost of holding? Like, who cares? Right? It's a fundamentally good investment.
Yeah,
There's a little problem. There's a little problem with your thesis, though, Carmen. So I can literally prove with data how well technical analysis can work, but outside of that, right? Like you make some assumptions, like, okay, what if you make a bad choice in asset and it crashes, right? Well, if you're really good with technical analysis, if it crashes, you should be out if you're good at TA long before it gets to a price that's going to cause you significant losses, right? So, like, even if it's a fundamental mistake that you chose the wrong asset, so to speak, right? If you're very astute with TA, right, you're going to be protected from your losses based on your indicators and your analysis. So I just disagree with you based on how I use TA specifically. Now, kind of to address Dogo's question, why I don't really deal with the prediction aspect of it, right? And what the question that you asked is because we know that those numbers are being derived, right, by using things like Fibonacci, right? So you can swing high, swing low. your Fibonacci's will give you the potential range, right? If your extension goes past, say, a 786 or 618, et cetera, et cetera, et cetera. But you have no way of knowing if it's what the potential is for it to reach those zones, right? You just have what the zones are. So it's a very bad predictor in that regard. And not to, disparage anybody's name, but I'm going to use this person as an example, right? BC Backer is a big Fibonacci user, right? So he had that, mapped out using his fibs. And with Bitcoin, he came very close, right, into predicting or forecasting the top, right? But with that same very metric that he used over on XRP, he was predicting $8 to $9, $10, right? And we got to 2, right? So it shows you the inaccuracy of what the Fibonacci's can forecast, right? When you're using the Fibonacci's. And so like the data, it speaks for itself at the end of the day about whether how accurate it is or how accurate it is not.
Oh,
So,
well, 100%. And
to,
real quick, Karma, I agree with Karma's point where fundamentals trump the TA, but I don't think that TA is wrong. And to your point, Kasha, the only reason I was asking that is I was playing around on TradingView the other day and trying to like scale out, like if you were going to play with what the numbers potentially could look like. I do think you're right. I do think that, you can, based off your Fibonacci retracement levels, you can't really fairly guess. But now being in a bear market and looking towards a bull market in the near future, 6, 12 months, something like that for the start, it is a helpful thing to be planning your strategy for potential exits, like let's say a 10%, because we were talking about this earlier. Like if XRP were to go to $10, who's going to take profits? Well, at the end of the day, in my opinion, a sound investment strategy would be like, hey, I'm going to have levels to take out 10% or 20%. And then as it keeps going up or whatever, I'm going to be, moving out at certain positions. And so it's one of those things that I do think is a valid conversation to be had in this community right now, especially for like new people that are new to investing. Maybe some people are so young, they've never really been invested in the stock market or any other asset class. And crypto is like their first asset class. And yes, it's highly volatile. So like in a bull run, how do you maintain a structured composure as prices are moving up to where you're not, completely eliminating your position, but at the same time, you're able to capitalize, I don't know.
Let me quickly answer that because I know they don't. Let me quickly answer that because I know we don't like talking about price a whole lot here. But just 2 things real quick. First of all, there's the problem with most TA that I see publicly and kind of subtly in what you were saying is trying to find those targets always becomes this just subjective nature of what I feel, what I think, and there's really no definitive indicator to say where those targets should be taken. And once it becomes that vague, right, that's where all of those room for mistakes are. And most people will make those mistakes using that kind of trading methodology, right? Because you don't have anything that's really going to give you the answer to the question that you just asked, right? And so, in short, so we don't end up talking about price very much, I encourage you to watch my very first YouTube video that I did on the subject, and it will give you what I consider to be the best way to manage your portfolio in those dynamics, whether we're in bull or bear market, because it won't be subjective in nature at all. You will have a point in time that you'll always know where to be, whether on the inside or on the outside, at any price level, at any time of the day, at any year, for any asset. So I encourage you to watch my video and it'll give you those answers.
Hey, did anyone else notice that he just pulled a Glenn Ross on me? He's always selling. This is awesome. Good job, Costa. I will check it out. I like that answer.
No, Costa comes in all the time. One of the things, like, okay, now let's look at the fundamentals of technical analysis. This is actually kind of one of the root thinkings for my patent that got taken away. But it's like driving down the road looking in the rearview mirror. Eventually, there's going to be a turn that works as long as you're on a straight road. But as soon as there's a turn in the road, now you've crashed. And, I think generally speaking, roads are straight. So generally speaking, technical analysis because you can't do technical analysis without looking at historical data. That's the rearview mirror in the analogy.
And hold on, before you go any further, like we'll end up having a conversation without any metric to prove the thesis that we're proposing, right? And this is why I would like to just encourage it to be a data-based conversation instead of a sentiment conversation. Because yes, you're 100% right that technical analysis is using historical data. It's a lagging indicator. We've all had these discussions, and I'll 100% admit that it's using historical data. But at the end of the day, and I'm just using this as an example, I'm not pitching Dogo at this point. But if you take a methodology, anybody's methodology, in that case, I use mine a particular way, and then track how the methodology is being used and what the actual accuracy is using it, you get a very mathematical, provable number. And what I'm saying is we need to be having that discussion based on the math and not just the sentiment. Because I can prove that even though it's looking very much in the past, right? That historical information, as it applies to any given moment, I know where to be in or out on price for any asset. I'm not just like saying that figuratively. I'm saying it literally, like I know where to be on any asset at any time of the day based on the indicator that is indeed using historical information. And they can have a provable accuracy that you can go and look up yourself. Like, so that's the real important part.
Well, look at. I'll just argue against myself here. A lot of people look at what a lot of people think is quote fundamental analysis. They're using accounting statements. Well, accounting statements are about the past. Finance is about the future. Accounting is about the past. So if they're doing their quote unquote fundamental analysis based on the accounting statements, it's just a little bit more sophisticated form of fundamental or technical analysis, right? Versus when you go in and you understand the business model and you're looking at forward looking data, and you're looking at a network that's getting built out. It's not already built out, right? So you're watching it grow. It's like betting on a kid to grow up. Once you see the pattern, like, you figure the kid's going to grow up, um that's a
then they become a teenager.
Yeah, and then they hate you, and then eventually they like you again. And but yeah, I mean, and it's like, yeah, I see. When I say fundamental analysis, I don't mean looking at accounting statements. I mean, that's kind of part of it, because it can give you a little bit of a picture, like, is this kid, a bad kid or a good kid, right? But you have to have a little more sort of there. It's hard to put numbers on it, right? Because it doesn't exist yet. But a little bit of judgment, you see one kid and you're like, that kid's going places. And then you see another kid and you're like, yep, nope. And I mean, nobody wants to hear that about their kid, but there's a lot of yep, nopes in the world, right? I mean, that's just the nature of the averages. But yeah, there's less numbers there. You got to see the situation. I get your point with the numbers and the math and the technical analysis. And as far as I'm concerned, using accounting statements is just a different form of technical analysis. Oh, we got this PE ratio or this return on equity, blah, blah, blah. This IRR, yada, yada. It's all based on IRR can be forward looking. Still, I'm not convinced it's the best method to analyze a deal on. It's a quantitative versus qualitative, I guess. If that makes sense.
One day, I just encourage you to go down and put the numbers in and mathematically look at it. And I think you'll be impressed as a person. I can tell is very intellectually inclined, right? So I just encourage you to put the numbers to it. And at the end of the day, it's just an equation. And so it'll have a definitive outcome. And I think that's the best that could be said about it.
Yeah, I think it has use. I'm not trying to say it doesn't. It just, my preference is to try and try and identify the kid that's going to grow up and go places. Kind of like Ripple, like as a business. Think of the Ripple as a kid. I saw Ripple and I was like, oh man, this kid's going places. And like, here, look where we are. This is crazy. And it's not even all the kid's fault, right? Like this whole situation, like the bill in Congress and all this stuff, the fact that this is a topic on Capitol Hill, that's not Ripple's fault. Like Ripple's riding a wave of the crypto wave. But, out of all the kids riding the wave, they seem to be surfing pretty good. Right? Like that's the kind of, I don't know.
I think that is due to the professionalism and team that actually exists, right? Because I think a lot of people in their circumstances could have made a lot of the wrong decisions and they wouldn't have ended up where Ripple is at right now. Like they really built a good team. And so those people have such good understanding of not only the law, but finance, but business in general, crypto and to cryptography in general. Like they just have an amazing team. So I think other people in their predicament may have made choices that could have had a lot worse outcomes, but I think because the team's so well, they know how to kind of like future proof everything that they're doing, knowing what the risks actually are, right? And once you can properly identify those risks, then you can kind of make preparations to say, okay, this is what I'm going to do about it. So, like me having watched them, that's why I felt so good about the case, because I saw them as far back as 2018, right? Acknowledge that they were always under this cloud of risk, that decentralization was their ultimate objective as it applied to the ledger, right? And so just step by step, they addressed each one of those issues, right? For every validator that we bring in the UNL, we'll remove one of ours, like escrow, like all of these different things that they did, how they promote, how they talk about the asset, like we're all carefully crafted so that it wouldn't become a albatross on the neck of what they were doing, and they could succeed. So I give hats to the team for that, because I don't think that most people, could have done that without some of the expertise of the people that were involved.
Couldn't agree more with what you were saying, Kasha. Didn't take long before I could see as well that Ripple was the one, as we say, and where they were going and things like that. So yeah, all mad respect for Ripple and what they have achieved so far.
Hey, Sauce, the thing you put up was also very interesting news today. I don't know if we wanted to jump into that at all.
Yeah, sure. I've seen it. We've talked about it already in here a couple times, but let's dive into it. How the fact that they are going through all of this effort for, I don't know, what has it been, 5 years, going to proof of stake, and the Ethereum Foundation comes out and says there'll be no difference in fees for the network. The entire reason we've decided to switch to a proof of stake network.
Okay, I'm not kidding. I literally, was it you that sent me that?
It could
Somebody sent me that.
yeah.
Dude, I literally laughed. Like,
Yeah.
literally laughed. I was like, you've got to be kidding me. Like, you just, like, are you just going to shoot yourself in the foot? Like, what?
Does anybody know what the actual technical dynamics that would cause those fees to stay high actually is? Because I read that too, and I was like, what the hell? Because ultimately we were all at least expecting the fees and the transaction time per second to increase, right? Even though there was an increase in risk of centralization. But does anybody know the technicals of why the fees wouldn't go down? Like that could be like a big deal if it's actually true.
I don't know, but sometimes you do have to accept a new problem in exchange for getting rid of an old problem, right? So if you got rid of the old problem of proof of work and high fees, but they introduced a new problem of, well, you have the incumbents, the rich get richer kind of thing from an economic point of view. Yeah, that's a reasonable trade. But to accept the new problem and not even solve the old problem, I mean, now you got a head scratcher. Like that's
'Cause what throws me off, all of the proof of stake chains that we have now have low fees. So it just doesn't like equate to my brain like why this one would be different and wouldn't have low fees as well. Now on the flip side, all of the proof of stake chains that we have now also kind of have, they're real buggy, as it applies to how well they work too, right? So I think that could be expected when it moves over to proof of stake. They could be a wrench, but I'm still not understanding this fee thing. So it'd be interesting if someone knows more that could kind of explain it.
Well, so from my understanding is the nodes, right, of the network proof of stake, right? So it's you're staking to create a node. 32 ETH is the minimum, right? You have to be holding to be able to be a validator node on the network. You're rewarded for said staking. Now, if the network itself can't come to a consensus fast enough to where they think that their amount of transactions per second would be occurring, the fee obviously would go up, right? And this is an anti-spam feature, right? So the network doesn't get attacked. And so what they're saying, to my understanding, is our calculations are with the amount of users that already exist, with the structure that we've built for the proof of stake staking methodology, where the people who are staking are going to be rewarded, um, the fees are just going to be just as bad.
Thank you for that explanation because that actually made sense. So it's kind of like a fee escalation as the network starts to get congested, and then that fee could make the fees go into an unreasonable amount counter to what they wanted to happen in the first place.
Yep, exactly.
It
Oh
also
man.
says too on their official post, they're mentioning how the gas fees are a product of the network demand. So basically, so yeah, and then the merge is going to depreciate their POW system and switch it over to proof of stake, but they're not making any significant changes to the parameters that influence the network capacity. So this is that's them choosing not to do that.
are they copying like the XRP ledger fee escalation functionality? Basically, I mean,
Well, if the network isn't dependent on the energy uses, right, the amount of power that could be produced to mine the block, right, in the sense of like a proof of work system, how do you deflect against like almost like a DDoS attack on like a blockchain? And Gene is in here. I don't know if you can speak, Gene, but you might actually know better than I, and maybe can explain it a little bit better than I if you can talk about it.
I mean, you guys are like spot on with a lot of this stuff. It's awesome hearing everyone speak. Thank you for having me come up and speak to you guys. It's awesome hearing Kasha, spread some knowledge. Going ham. I like hearing what you had to say. I like your perspectives as well. Always love to hear different opinions from everyone. I would have to say it's more so, why isn't it a ISO 20022 messaging standard? Why isn't it included in that? Because that would be one way of circumventing the fees. But I mean, if you're just kind of saying, "Oh, I'm moving from proof of work to proof of stake," it's not really gonna help you in the long run if you're having miners in the equation. Miners are there either to validate or to finalize it, in a sense, and you need to kind of get that system. It's terrible. It feels terrible talking about it, but in a sense, you think about energy consumption and efficiency, and the whole narrative that
Come up, I don't hear him.
Yeah, and not only that, in the proof of stake setting, right, where proof of work, the miner was at least being paid and rewarded for their service to the network. In proof of stake, you could almost look at it as like a money handler, and there's licenses and different laws and things like that against that, from like a validator standpoint. So it gets a little bit more complicated, I think.
Gene came up and
I don't know if you guys saw. I'll shut up real quick, but I don't know if you guys saw David's response to Vitalik, and he was basically saying like, how are the miners not basically shareholders? They get compensated. And I was like, dude, that was a savage analogy right there. Like a good lawyer could take that analogy to a judge and make a pretty comprehensive argument.
So, and maybe you guys did talk about this last time, but the other part to that is that if, you know, it's within a proof of stake model and the legislation that was just passed, this came up in Lady K space last night. It's like, if staking potentially could be a sign of a security in the future, wouldn't that invalidate the whole protocol?
Yeah, so it could be looked at as like a security. Not only that, the person who you're giving it to, right? The person who is holding it while it's staked, that's a money handler license. That's you need to, you need to operate under the rules of like whatever country's laws, and under the financial regime and things like that, like AML, KYC, all of those things need to be done.
Which is really confusing. Again, it goes into, you're making a move to mainly, the only thing that I can surmise out of the whole thing is to move into an ESG, compatible model where you're not improving necessarily scalability or speed or any of the other stuff, and the fees are still the same, and it could potentially be a security. It's now, it doesn't really make a whole lot of sense, like why you spend all this time and all of your developers that are working this hard to do something that could potentially not solve anything other than one small, one problem.
It's like self-sabotage in a weird way.
And he attacked us as a community at the same time.
Well,
total sabotage.
Bringing this back to cool animals. I mean, so do cats when they're backed into a corner. So, I mean, I don't know. I mean, Vitalik's a very smart guy. Vitalik's a very smart guy, but homeboy is literally caught on camera picking his boogers a lot. So, as an adult, I mean, what's going on there?
Here's what I'll say to what you're saying, Dogo, and y'all, anyone tell me if this makes any sense. But if we go off of the historical behavior, how the people who are kind of heavily influenced with Ethereum have been with the likes of JP Morgan and others, right? I think we can almost assume, right? And this is big speculation, so nobody have to definitely make no financial decisions off of this or anything, right? But just thinking out loud, right? Everyone's articulating the security risk, even if we go to the kind of like note, right? Security note, all of this becomes a risk when you have this little interest-bearing dynamics. Like they've already went after Coinbase, spreading them behind the same thing. So we know what the SEC's attitude towards, that kind of behavior is. They could be setting Ethereum up to become a security and just give it to the accredited investors in the JP Morgans. And like that could be the long-term play as they rug pull from under all the retail people. Like that's one of the only things that really kind of makes sense to me. And when I look at it, it's like they've already determined it's going to be institutional and for accredited investors only. And so they're just going to go in that accelerate in that direction. And whatever happens, happens.
That's an interesting thought there, Kashta. Because, I mean, if you think about staking, you're putting up capital and you get a stream of rewards. How is that different than buying a bond? You put up capital and you get your interest payments.
I mean, right. And they already bought MetaMask and Fura. Like they've already bought the underlying infrastructure that is Ethereum. So it just seems like the JP Morgan connection, man, has some, tentacles to it that we still haven't seen yet. But again, that's big speculation, man. Take it out with a grain of salt.
No, I mean, they definitely have the copyright information for Infra and MetaMask. There's no question about that. To what came out in that whole proceedings between the Swedish law that Consensus is being sued over because they had VC funders who didn't realize that JP Morgan obviously had bought the rights or whatever from Consensus in an illegal way. Or maybe it was just a plan all to begin with. I don't know. We'll see that come out whenever that court case ends.
Well, okay. So contrast that with the AMM proposal that David and somebody sent me. It looks like Stellar has kind of a similar proposal to I haven't read their proposal yet, and I still need to reread the one that David put out. But on the surface, like as a real quick, it seemed similar. So then ask the question, how is that different? How is that not a security? I mean, you're still putting capital into well, I guess it's not an account that's necessarily run by anyone.
Yeah, so I think the way to answer that is we always have to remember, at least going off of historically what we've seen so far, that if they bring out a AMM to the ledger, I think though the Ripple activities will be separated from the public, ledger activities, right? So they may build a specific product because they've been saying they're going to build an EVM compatible sidechain, right? And so it looks like they're going to run their activity through something that retail won't have access to, right? And then if retail wants to then, design their own AMM liquidity pool to then do whatever they're doing far and separate from Ripple, like they could do that. But I guess, any associated risk would have to be kind of weighed out by the public and if it's something that they want to do or can do at the time that it becomes available.
Well, I mean, if I understand the AMM thing right, it's going to be an amendment on Ledger, so you could start an AMM, I could start an AMM,
Yeah, that's my point though. Like, but if you knew you were going to start one and it could be potentially deemed a security based on the activities of the market maker and what you're doing in, specifically that arena, right? Then you may not build it. But for Ripple, they already understand that if they plug it strictly into their business, it doesn't really have the same effect for them as it would if you were to start your own pool, right? Because they pretty much already have their own pool, at least from the XRP side. So I just think that those two things are going to always be separate, what they do and what the public does. And if the public decides to do it, then they may have to go through some actual hoops to get a money transmitter license and get a security license before they can take on those kind of activities. I mean, they're legitimate activities that can be very profitable. So I don't think that we should always view some of the opportunities that exist using the assets in this pure decentralized manner, right? If we have to go and then get the appropriate license and even register as a security to then be able to target a corridor and make a potential 3% off of 40 billion indefinitely, I think that's a great business and we could all do that, but just with the appropriate licensing.
Yeah, I have to agree with Kashta on that. Just because, at the end of the day, decentralization, from a technical standpoint, even though we all have different, opinions about decentralization, decentralization is, splitting up the workload for something that's centralized. So instead of depending on the centralized server to do everything that we wanted to do, we have different servers to help, back it up for the workload. Like think about like IoT. IoT has billions of devices that it has to deal with. So multiple servers being able to handle that workload, that inflow of devices makes it much easier for everything to interoperate and there to be less crashes.
So, and Gene, I have a question. So you said something before, and Michael had asked a good question because I was kind of thinking how it would work myself, right? And so you said something about the Ethereum proof of stake if they were using that ISO 20022 standard between the nodes. And did you mean between like the nodes having some sort of interoperable messaging standard between the nodes themselves in a more efficient way? I don't know if you could explain that differently.
Yes, I would definitely agree with that. Yes, the nodes are going to have to actually communicate with each other via consensus algorithms. And, these nodes are going to have to be able to choose which consensus algorithm is going to be best for how these nodes are going to communicate, especially if if you're going to use a proof of stake model. Again, what if a proof of stake model doesn't work and maybe you want to go with, something different? There's different consensus algorithms that are meant for specific tasks and to make things easier. Because what if, that consensus mechanism says, hey, let's just move this to a DAG, in a sense. Maybe this process is meant for a DAG specifically, let's go ahead and create the structure for it that way, as opposed to, complicating it and adding extra code that doesn't need to be there, in a sense.
Cool. Thank you.
Dude, John just went he went Super Saiyan on us. I do have a question about that though. So how can a DAG as a layer 0 be built on top of a layer 1?
It's just how the networks communicate. That's a great question. I mean, because again, it's a protocol. So again, it's kind of like me using, you know, a TLS protocol, like a transport layer security protocol, and then just saying, hey, maybe I want to use DTLS in a sense where it's deterministic. You know, it's just changing the protocols at the end of the day. I mean, because, you know, a DAG, you know, we already know it's a directed acyclic graph, but, you know, it just depends on, you know, how the inflow and the outflow of the information is going to be. You know, what's easiest for it at the end of the day.
Is it almost like perspective, I guess? Like which protocols you're using for which use case?
Yes. Because when you think about it, it's like, why, for Ethereum in a sense, you know, XDC was, you know, was a fork of Ethereum, but their transactions per second, you know, time is much better than, you know, Ethereum based off of it, or Ethereum by itself. And we're not even including, you know, the fees, the gas fees itself, where, you know, it's almost, you know, nothing with XDC. So I think it's more so like getting that API communication. I think that's the main thing, API communication, you know, so then you're really, you know, building out a messaging standard. Because if I can just communicate from one end to the other that, hey, I have this amount of assets and you want it, you know, they should be able to communicate with one another to say, all right, we're going to move this, you know, set of assets over to this corridor. And this is how this transaction is going to be finalized and time stamped, and it's good to go.
So does that mean, and I asked this to Death and Karma before, and they'll probably remember this. This was a couple months ago, but hypothetically, if problems happen on the Ethereum chain, could XCC and DAG move over and migrate to an XRPL or Algorand or a different protocol that would facilitate their future success?
Well, for those exact networks, I would say. Oh, were you asking Gene or me? I'm sorry.
I mean, I guess I'm throwing it to the room. Gene was just kind of getting super technical, and I'm not a very, you know, I don't work in this space.
They wouldn't be able to go to Flare.
Exactly. So that's what. So the easiest route would be Flare because of the Solidity. Because XDC is obviously running Solidity for the smart contracts, and the same with Ethereum. So in that sense, right? Like we don't have that in the XRP ledger. That wouldn't make any sense. But Flare, yeah.
That makes complete sense for me. I that's one thing I did know. Okay, you guys can give me a little credit. Shit, I did know Solidity is EVM's basic. What is it? The programming language? Am I saying that correctly?
Yeah. Yes, it's the programming language. You know, the crazy thing is there are like hundreds of programming languages that actually will blow your mind.
Yeah, so like Java, C++, fucking Solidity, and then that's pretty much where it stops in my knowledge base.
Yeah, remember, these are only English also that we're talking about. It's a big world out there.
And could you imagine? So, like, Chinese is a symbolic language. Could you imagine trying to program in a symbolic language? God, how would that even work? I never thought about that.
Imagine the same. Well, not the same, but I guess a little less difficult would be programming in Arabic, because Arabic is very. It's a very difficult language. I felt like I beat my head against a wall for the first 6 months of trying to learn that, and man, it's a beautiful language, but it'd be very tricky to try and code in, I would assume.
Yeah, that's odd because I kind of took to it, at least, you know, the little bit that I did pick up, as easy, right? Because it had very strict rules, just consonant, vowel, consonant, vowel, consonant, vowel. Now, once you kind of can identify the characters, you know, that may have been difficult, but the rules seem pretty consistent. But just real quick, man, we got to remember that Ripple is doing still have on plans to put out the federator for the XRP ledger. And this still does come down to being a liquidity game. So if the EVM side chains become basically bridgeable straight to the XRP ledger, and a lot of volume goes there because of the utility that's already growing, XRP Ledger could be a very well placed that a lot of the Solidity developers end up as well. So I wouldn't discount that as a potential.
I agree. Go ahead, Wolf. Thank you for raising your hand.
Thanks. That a little bit off topic here, but why is it so that scams are blocked on the ledgerscale account? Isn't it that a little bit childish? Couldn't we bring him in again, since it is a open forum?
Are you talking about? You said scams?
Yeah, scams. Why did
we're
you
gonna,
block it?
we're gonna leave him banned. He has a narrative driven that is very much so against our community, unfortunately.
Oh, all right. Yeah, I just thought I was going to bring it up, but yeah.
Well, and I guess this, I don't want to speak for Death or Karma, but this goes back to their aim at education. And I don't, I converse with scams a lot, just mainly because I like to pick his mind on stuff. And I agree 100% with Death. His focus is one way, right? So most of us, including myself, I'm in here because I want to learn from you guys. So, people that are smarter than me or work in this industry, I do not work in this industry. So I want to gather as much data as I can about stuff I don't know about. Whereas instead of just contemplating one narrative against projects we're interested in. So it's a good question, though.
So I do want to comment. So I've spoken with the team. One of our concerns is, and we are being transparent with this. One of our concerns is that we don't know his intentions. We don't know if he's a good actor or bad actor, and just because of that, we don't want to risk, people who come to, these spaces in ledger scale to potentially, get exposed to, a bad actor. And it's simply because of
people
that.
should be smart enough here in the space to
I'm sorry?
see for themselves what is now, but people could see for themselves what is good info or bad info.
Yes, so
It's not
that's one
It's
factor.
it's
Another
almost like
factor-
Wolf. If I'm standing at the street and it's a red light and you're about to go walk across the street because you're looking at your phone real quick, right? Like I'm gonna be like, listen, look at the light, right? Don't walk across the street. And so, as much as it's up to that person to be due diligent, right? Like it doesn't stop us from a user standpoint, from being able to help somebody else, or in that standpoint, feel like we should be doing what we should do to protect somebody else. If that analogy made sense.
If you've been around this space long enough, there's some pretty intelligent FUD that is just, and I mean, the thing is, he's just got his narrative he's pushing.
Well,
And
it's not only that. I mean, I think he may be allowed to say whatever he wants to say, but it came to a point personally. This is my personal view. My PFP our side. That's my personal page. It came to a point where personally, I think he started to harass my team members, and that's something that I'm not okay with. You can say whatever you want to me, but when it comes to just fun talking smack, that's something I'm not okay with, and I just think it's better for us to ignore it and just to move on to what we came here to do.
All right then, if that's what. But second chances are always something also. If we could give him a second chance and see if everyone agrees upon it, if it's okay what he's bringing to the table, if or not.
It definitely, and it's not like we're not cool with them or we dislike them. Again, we're just trying to protect whatever the people that do come into these spaces. And of course, I've been personally evaluating his behavior in the spaces, and he's still tagging. It's not something that we're not trying to get clout like that. We're not trying to get into any sort of scenario where we have to sort of speak on things. The one thing I do, he did sort of mention, which again, I'm trying to be transparent. He sort of said, if you guys donate and you guys ask them what we do, what we, use those funds for, we're more than open to let you guys know. The only time we have used funds so far is if you guys go to our YouTube, all of our concepts come in house. The ideas from the logo to the introduction. It's all in-house creation, but none of us are designers. We do have to, outsource some of these services like the logo. We did, I did have to hit up, some of my people that I work with. Same thing with the intro, the overlays, some of the software, some of the subscriptions. It all has cost, and there's only been one transaction uh, deposit to me to sort of compensate what I put back into it. But that's you guys are
Yeah,
more than welcome to ask
that's
questions on what we
literally,
do and what we're doing.
and all the donation accounts are obviously on public ledgers, so you can verify that. There's been one transaction to compensate for that work, and that's it. And until I get the bank account and stuff set up, that's probably all that there's going to be. I mean, if you make a donation, it's just going to sit there in the ledgerscale account until we get all the stuff. And
And
we're going to operate as a nonprofit, so there's all these disclosure rules that I'm learning about, which oh my goodness, I did not expect that. But I mean, everything's going to be, yeah. And the scams guy, he's not blocked from my personal account. He joined my space the other night. Now, he probably thinks that I like ended the space because he joined it, because when he joined, like all of a sudden my phone had a conniption and the thing shut down, and then I opened up another space. But it had nothing to do with him. My phone just went haywire. So
Yeah, I understand what you guys mean, because he have a lot of interesting things to say. If not all is like good info, but I'm a person of second chances, so I was just thinking to bring it up. But if you guys are totally against it, it's fine.
Pants. I mean, I'm the one that banned him, and when I did so, I figured,
I would not say you banned him. This was a unanimous vote from the entire team.
Well,
I agree. Because at first he was torturing you. He was almost like, attacking you, and then we were still letting him in here, and then we just did a vote, and we were like, it's better if we just keep him from at least the ledger scale space.
Well, when I clicked the button, but yes, we did discuss it. I'm not a unilateral type of person. I can still be.
Why I like centralization a little bit. This is my favorite aspect of centralization. You get to keep the bad actors out, right? Isn't the whole point?
Well, but when I banned him, I was thinking about it. I was like, well, you know how I used to have a roommate. He was a hockey player, and we used to do this when I worked at Fidelity. If somebody got on the phone and they were rude to you, we called it 2 minutes in the penalty box. And what you do is these people will get all worried, right? Because you're about talking about their money, and you'd be like, "Ooh, I don't know. Oh, this doesn't look good. Hang on a second. I'm gonna have to hang on. I'm gonna have to look at this." And you put them on hold, and you give them 2 minutes in the penalty box. Meanwhile, there's nothing wrong. It's just that they're being rude, right? So you let them sweat it out for 2 minutes, and you get back on. And yeah, I mean, so like when I banned him, I was like, well, maybe he can get a couple days in the penalty box. I don't know, but he's got a narrative. Like, it's clear as day.
I was actually hoping that when we did ban him from the Ledger Scale account, his reaction was going to be like, hey guys, I'm really sorry. Do you mind if I come in? Instead, he went like on the attack and started really ramping his stuff up. And so obviously I feel like we made the right decision at that point. But I'd like it if we could change the subject. I mean, I don't want to.
Yeah, I was about to say, I don't really care. I don't really care. Like,
it's definitely a good conversation for transparency, for sure.
Well, okay, for transparency's sake, yeah. I mean, look, what in the opening, I say, look, if you're going to speak up, please be cordial. Like, that's all. Be nice and be curious, and let's discuss things. And I learn by doing these spaces. I've learned a bunch of stuff. Clarified some knowledge that I kind of sort of maybe knew, but not really. I mean, yeah, that's the goal.
Yeah, of course, I have learned a lot also, Karma, in the spaces. So thanks a lot for that. I just was bringing it up, but I'm never gonna speak of it again if you guys are so against him.
Thank you for bringing that up, Wolf. By the way,
yeah, I agree exactly. I do.
It's something that again, we're not trying to hide anything. So if anybody has any questions just like that, come up and speak. Come up and ask. Thank you.
No problem, guys.
And we got a couple new people that came up. Hi, XRP and Crypto Red Eye. How you guys doing today?
Pretty good, pretty good. I was basically just gonna say, as a viewer, I don't really like the guy. His negative narrative that he tries to push every time he comes in here just turns me off. I kind of want to leave.
Yeah, and that's why we came to the consensus vote, because you're not the only one. I tens of people sent the same thing to me, and so
Yeah, other people said the same similar thing to me too.
So with changing the subject, I do have a question because this was brought up, and I think me and Sauce couldn't get to the bottom of it. But is Algorand a quantum proof protocol?
You got the guy in here to answer that.
Yeah, Gene, right? But no, I don't know if I would really call almost any of the blockchains today quantum proof, because maybe from the characteristic of overpowering the chain, there might be differences for some, but there are really I don't know if there's anything 100% quantum proof out, other than if you're using that like Nosh certified quantum proof code for whatever you're using it for. If you want to answer on that, Gene, too, because you work in it.
Yeah, I would. I mean, you guys are kind of spot on. I mean, I do appreciate the love. You know what I'm saying? I do appreciate the love and recognition. But I would say, it's not so much quantum proof, but it just depends on the interoperability with the private keys itself when it comes to private key and public key distribution. Because you putting your crypto on your wallet, on your hardware wallet, and you actually storing on the wallet and you're not sending it out, that makes your crypto quantum proof because your public key isn't exposed. Because when it comes to quantum computing, they're just going to attack the public key because the public key is initially used for the encryption. So if they can break the public key, then they'll be able to see your private key. So to make sure you avoid quantum computing and in a sense be quantum proof for now, is just making sure you don't expose your public key. Have a wallet that's meant for spending, and have hardware wallet that's meant for just storing your assets and just leaving it there. That's the safest thing you can do right now.
Yeah, that makes a lot of sense.
Since you mentioned it, if you have a wallet that you only have stored XRP on, and if you take the XRP toolkit and delete the address or the reserve and reset the keys, or the messaging keys also being restored, resettled.
I'm kind of lazy. I would almost just buy another ledger and then just send the stuff that I really want to hold long term there.
No, it's not that difficult to rekey a wallet if you needed to rekey the seed phrase, so that you technically were quantum resistant. I like the term quantum resistant, actually. I don't like that quantum proof, right? Because it's almost like you're bulletproof, right?
No, I'm just wondering, no matter if it's the same key phrase or whatever it is, but if you have a wallet that has been used, then you use the XRP toolkit to delete it and start it all over again. Do you reset some of the messaging keys or something like that?
Yeah, you would reset the secret phrase. And so there's no, as long as you don't submit a transaction to the blockchain, there is no hash for a quantum computer to take and try and break the algorithm cryptographically backwards, right, and to force itself into the wallet.
Nice.
if that was
What
correct.
about the transaction of the XRP getting to your wallet?
It's safe. That I would say it's safe because you're moving it, to something completely private in a sense. You know, you can think of your wallet. I mean, you're moving your keys, your actual keys from an exchange to a wallet. So it's actually safe because you're only exposing the public key of the actual, the exchange that you're using, the exchange wallet.
Yeah, like so in this instance, right? So say you had two wallets, right? And so I took XRP from one wallet and sent it to the other wallet. So technically, the other wallet that received the XRP is still in this quantum resistant state, but the XRP that sent the wallet that sent the XRP is almost in a where a quantum computer could take that hash and try and cryptographically backdoor it into the wallet, right?
Well, because wouldn't it be because the receipt? Okay, let's say I got two wallets, and I send some XRP from wallet A to B. The thing is, the transaction blob that processed that transaction could possibly have a quantum computer break it. And somewhere, I don't know how this works, but somewhere in that transaction blob, it has to verify that it's signed by the proper key, like secret key, versus the wallet B that receives the XRP. It's never sent a transaction. So there's no like transaction blob to crack. It just kind of received the XRP. And I mean, that would be true, I would think, for Bitcoin and the rest of the networks as well, I think.
I mean, you guys are spot on. Also, I wanted to tell you, Kashta, if I know you're talking about Solidity and learning about it. Have you seen the website learnweb3.io? It's very user friendly. You
I,
would like it.
I was referred to it before, so I'll take a look back at it again. So thank you for the reference.
Absolutely.
You know what kind of sucks is like that's why when they put the I guess the regulators or law enforcement on the tornado people, like although there may have been some bad stuff going on, you could see how there may have been a need just to have a kind of something like a mixer just to kind of mask when you want to make a payment to somebody and like not have to expose addresses. So even if you weren't up to something nefarious, I hate that they take a tack, throw the baby out with the bathwater, so to speak, man, because there's real utility in that. And now because they, put a bad narrative around it, you can't use something as simple as, something to mask your transaction like that for privacy reasons.
I absolutely agree with you.
Hey, hi guys. This is Crypto Trinity. How you guys doing?
Welcome up. Thank you for joining.
This is my thoughts about the quantum technology we have out there today. It seems like to me, I mean, I could be wrong, but it seems like to me, eventually, wallets, cold and hot storage wallets might be obsolete, and we might be going into sort of like an institutional custodian infrastructure, right? Um, a couple of days ago, I was on a live chat with PolySign, the PolySign group, and it seems like PolySign is going to be gearing up for something like this, where you would just give PolySign your XRP, for example, right? They would hold it, they would give you security, and protect you from quantum, sort of like protection from quantum trying to open up your wallets. How do you guys feel about that kind of um,
I, I I think from PolySign's point of view, I don't know if they ever really want to be too much retail facing, but I do think that they would supply products to say your banks and your financial institutions to make that what exactly you're talking about completely accessible to the retail public. And maybe even like having staking options and all of these variable interest things and different things that you'll probably be able to do in a safe and insured uh, structure for sure. I think that is definitely the future that PolySign is setting up for themselves.
Yeah, because from what I know, right, with quantum technology, right, it's able to basically crack any code, any password in under a second, right? So if we keep going down this road of quantum technology and blockchain, wallets, it's a matter of time before we're sort of unsafe from this technology, correct?
Just to kind of interject with that a little bit, that's a good question. Honestly, that's a good question. This is where, quantum resistant ledgers come into hand. I would definitely say it's on, it's on the people too, to protect themselves. You could again rely on other individuals to protect your keys for you from quantum computing, or you can learn how to do it yourself. I mean, those are the only two choices you're given. It's not to sound brutal, but you know, it's not just going to be, in a sense, PolySign, doing that. It's going to be other individuals that are able to do that, and that other cryptographers that think about that as well. In keeping up with NIST as well. NIST put out 4 algorithms that are supposed to be assisting with post quantum and quantum resistant. As long as you're applying those algorithms to your keys, you'll be okay. Like for instance, the XRPL uses ED25519. It's a great, it's a great, cryptography. It's a great cryptography scheme, and it's a great, key to use as well because it's interoperable with those NIST algorithms. So as long as the keys are interoperable and not stuck, for instance, with Bitcoin in a sense, and it's not to talk trash about Bitcoin, but a good portion of Bitcoin did use RSA. So quantum computing can break RSA. So it's kind of moving out of, RSA and into something that's a bit more secure and interoperable to where you can continue building on it.
Dude, I remember when David tried to explain why, because they started off with a different elliptical curve and then they changed it to the current one. And I read that stuff and I tried to understand it, and that didn't come out very well. I did my best to understand, and I finally was just like, okay, well, this is over my head.
It can be difficult. I'm not going to lie to you. It took me some months to really, tune into it and, driving myself crazy. I'm not going to lie to you. I know you're about to say something,
Yeah.
Kasha.
Yeah, whoever brought up PolySign, they do have some great presentations, and I think whoever brought that up made some good points in that how we handle crypto possibly could change with some of the innovations that they have basically come up with, but they're proprietary at this point. So maybe we could speculate, because I did hear in one of the presentations that they were thinking about open sourcing some of the things that they've developed on their side. So maybe they'll bring some of that, to the public via open source, because I think some of it is like even biometric in nature, and they did some real unique things with how they custody assets beyond just the old cold storage model. So my hope is that they're going to make some of it public here, and he's kind of even alluded to it. So we can only wait and see.
The funny thing, guys, is on LinkedIn, you can go on there right now, and their PolySign has posted a job posting, a few of them in New York, and one of their comments is you'll be able to work with Arthur Brittle himself.
That
Anyway, yeah. Do we have too many people? Because Michael wants to pop up. I thought
no, we haven't.
There should be room, right? It doesn't. It's not letting me approve him.
Well,
if you need me to drop down, I'll drop.
No, there's enough room. I already actually had approved him already, and it showed me that he was connecting before, but now it shows me he's a listener.
Yeah, I tried to approve him also. Anyway.
Oh, now he's a
on my
speaker.
end. I walked away from the router.
Oh, you're good. Twitter's been very strange also lately.
So I just wanted to highlight when PolySign was saying about wanting to get the public away from the blockchain. I think that might have just been more to the fact that the actual blockchain service itself, that's all going to become backend, and they're not going to have to deal with it. They'll deal with the application that whatever website the banks are using. The people will interface with that website, and the banks will worry about making sure that they execute the transaction details themselves, and that way protect them from mistakes that result in blackholing currency or not receiving funds and things like that, and not necessarily doing away with the blockchain, as the original question seemed to indicate.
PolySign actually has its own blockchain, which I found interesting. It's almost like a interledger protocol connector / federator. I don't think they've put any documentation out on it.
No,
But
it's probably going to be a ledger, so they probably wouldn't.
And that really gets at one of the core suspicions that I've had for Ripple for basically the entire time I've been aware of them. I've always wondered if the XRP that's publicly traded on exchanges is marketing and showing that this stuff works. So, Saudi Arabia, let's get together and we'll work out a solution that works for you. And the implementation that they do with their customers is not XRP, is not the exchange facing XRP ledger per se. But that there are a lot of easy arguments against them. The whole thing with PolySign is securities oriented, correct?
I believe
No,
so. I mean,
it's
I'm sorry.
crypto oriented, but they've got all the licensing in New York and everything. It's kind of a combo between PolySign and standard custody, and they've gone through the hard work of getting the licensing, and it would be interesting if they custodied securities and commodities.
I think they actually brought that up. They talked about the whole derivative market and how it's going to be tokenizing pretty much everything we have out there. And other rumor is too, right? It's sort of like linked to Codius, right? I mean, I could be wrong, but that's what I've been hearing too about PolySign.
I don't know, but I mean, listen, Codius is like a smart contract hosting platform without a token because it's centralized. So, once again, if they were using that, I mean, it's probably not something they would really make public, but maybe only privy to the financial institutions partnering with them.
I don't think Codius is centralized. I think Codius, if I'm understanding Evernode right, Codius is kind of like Evernode Lite. Because you can host your Codius contract on multiple servers, and you can pay in any, cryptocurrency or whatever denomination of value you choose. I think Ethereum came from Codius. I mean, Codius was the first smart contract platform.
I think the concept, came from Codius, for sure.
I'm not trying to change the subject, but the Evernode project, the more I learn about that, the more impressed I am. I think it's going to be
It's going to be huge, I think, yeah.
Yeah, there's a ton of potential there. Going back to like how we were talking earlier about, technical analysis, fundamental analysis, and like, looking at the kid and saying, well, look, this kid's got potential. I think you can look at Evernode and say this kid's got potential. You don't know necessarily what the potential is, but it's going somewhere.
It's been a while since I've done my fundamental analysis on a lot of this stuff. What is Evernode?
Evernote. Oh, sorry. Evernote is a smart contract hosting platform that will be utilizing the technology of hooks to create a decentralized smart contract hosting platform, which is a layer two to the XRP ledger when it comes out. It's still probably a year out because we're waiting for hooks implementation to make Evernote possible. But yeah, essentially what Evernote is like a Codius, but with a token and a economical system behind the hosting of the smart contracts for a layer two.
Speaking of that, do you think that like all the smart contracts will be built on the Evernote network, or could some smart contracts be built on their own sidechains? And also, with the bundle transactions between the layers, will it be easier to like hide what you are transacting about, or can you like take a dive into the bundle transaction and see what people have been transacting?
Yeah, I mean, it's not going to be like you can hide through transactions. Very doubtful. Can you create a very large stream of transactions that activate other transactions with the ability of hooks? Yeah, but it's still all tracked. I mean, it's still all public knowledge, right? On the ledger. So
It doesn't have to be. Is Vet in here?
I don't think.
I don't think it has to be public, and it needs NFTs because it needs XLS20, so it needs both of those amendments to go through before they can even think about going live. And yeah, I do think that they have improved mostly from an economic point of view, Codius, because basically on Evernote, what you do, let's say I have a smart contract, some set of business logic I want to run. I can pay various Evernodes to run my logic. They've done some additional thought around like, well, what if I like pay you and you don't perform you don't have a server, right? You don't, or you just don't run it and you kind of screw me. There's a way for me to know that and like not pay you anymore. If you as the node operator find out that I'm, say, running some kind of illicit service or something, then you can retract back the NFT, which means that I can't run my code on your node, and so that allows you some like protection, because like you don't want the government coming to you saying, hey, you're running this illicit service, right? So you want to be able to pull that back. There's a bunch of little things that they've thought about. The guy behind it he did a really good interview. I forget who he did it with. I shared it on Twitter, but he did he's a lawyer from Australia. And then they're also working with Richard, and Richard's kind of the main architect behind hooks. So, you talk about it's not what you know, but who you know, like that speaks volumes. The fact that Richard's working with them. I think they've got a good. I'm having a hard time trying to poke holes in it. I'm trying, but I'm having a hard time. I think what they're doing is sounds pretty good. There's a marketplace for the token, so Codius never had that. I'm trying to think, what are the other key points there? You run it on multiple nodes, right? So like I can take my business logic and pay several people, but then each time I pay another person, like I'm just jacking up my costs, right? So in terms of an incentive structure, there's a disincentive for me as the guy who wants to run the business logic to want to run it across 1,000 nodes, right? Because now I just have 1,000 times more cost. That's kind of stupid. Like, so that helps economically put in a threshold of like, how decentralized do you really want this? It's like 3 nodes good, 5, 8, and like there's going to be a natural limit that the economics will enforce. Stuff like that. I mean, it just seems very well thought out.
Great insights there, Karma. Reason I asking that it is because the polysign and the private ledger that people are talking about. I'm not a cryptographer at all, but the only reason I can see that being a private ledger and the Polynet could be on a side chain, in my head at least, but I don't know
I think each node operator can be private. So technically, even though, well, I guess you got to look at privacy on a gray scale, but even though I'm given the business logic to say 5 different node operators, each node operator can run it in private, right? I think. But then the node operators still have the code. So if they were smart enough, they could like reverse engineer the business logic, right? And then basically steal been through that before. Steal the logic. Yeah, that I see popped up here. I'm pretty sure, haven't you spun up an Evernode?
Oh yeah, I have an Evernode as well. I have a node. Sorry.
Yeah.
I would like to mention anything like cross chain before if I talk. It's always nice having you in here. Being able to talk to everybody. Something I just want to bring across is that always make sure that you secure the system that you're using. If you're going to be running a node, whatever, even if you're using like anything cloud based, make sure you're securing it. At the end of the day, because you're just going to make it very hard. You're going to make it harder for any of the other validators to do what they have to do, and for the network overall, if you're at fault, because you're bringing the network at fault. So you just have to hold yourself accountable as well.
Yeah, that's a good point. Actually, very, very good point. And actually, I would say almost, the biggest job, or takes the majority of all the work you do. As if you run such infrastructure, the XRPL, like if you run hardware there, you have a bit more room and stuff to do, to make, but it has also direct influence on your node or validator. With Evernode, they made it a bit easier in that sense of, I think they shut down already all. No, they don't, but they tell you like which ports you should shut down and everything, and like to close your node. So ideally, you have like the firewall set up so that only these ports are open and all that stuff. With the XRPL, for example, port 51235, I think it is always that port to which Rippled is communicating. So yeah, ideally you have only that one, and keeping obviously your IP address secret if possible. As a validator, you should anyway. But I think with Evernode, they show you you can see actually the IP addresses. So therefore, you should be a bit more cautious there to secure your stuff. Also run minimal stuff on your server, so don't have like ton of stuff on your server running as well. Ideally you have like one application for one purpose, one application or node in that sense per server, and you size it like as you want, or you put it like in a Docker and you isolate it that way. It's actually preferred to do. Evernote is utilizing it anyway. This is pretty cool. Every instance of it is a Docker image. That's pretty cool. But yeah, run minimal stuff. Don't install all crap that you have on your server.
Thank you so much for coming up, Vet.
Yeah, and thanks so much also for clearing that up. I know where I have to put in some more time to check out some things. So thanks, Vet.
Yeah, and coming up, we got like another couple minutes in the space. If anybody has any questions in the audience about anything that was talked about today, a topic or a question that you have is unrelated, please feel free to hit the request to come up. And if I could ask if everyone could hit that bubble at the bottom right and hit the like and retweet for the space so that hopefully other people in the future can find this information valuable as well.
Wolf, do you want to run such a node? Is this what you were asking?
Of course I would if I had the opportunity right now, but right now I have to figure out some other things with getting my PC is fucked and things like that, so I have to wait, but definitely I will do it in future.
Yeah, I mean, this isn't something you would want to do on your own PC unless you had a server.
Yeah.
Because, you figure it's running 24/7, 7 days a week. You'd burn your system out way too quick. I did is I rented a VPS, and I mean, you could rent a VPS for as cheap as $5, $10 a month, really. But
Exactly. Yeah.
It just depends on how many instances, like how many smart contracts you can run from your node. Depending on how much software you're paying for, hardware you're paying for. But yeah. And go ahead, Michael, and then Gene. You guys put your hand up.
So I was perusing the XRC scan, and when I was going through amendment, I saw that they were reaching quorum with only 36 and 38 nodes. And I was wondering if you guys knew if that is only in terms of what XScan is connected to, and that perhaps the broader XRPL ecosystem is a lot bigger, or if that literally is all that the XRPL is right now.
So go back to the last 2 days chats on our YouTube channel, and we went pretty far in depth on that.
That's funny. Actually, kind of what we talked about for the last couple of days. But I would say this: the majority of the structure right now is about 150 trusted nodes. There's 35 of them that make up the UNL, and then off of that 35, there's about 126 that are online. That would make up the rest of the structure that's trusted, I would say, so far of the XRP ledger.
Cool. All right, thank you for that short answer, and I will definitely look up that video as you suggested, Karma. Thanks.
Yeah, no, I mean it's a good in-depth question. If you listen to the chats the last couple days, there's a guy Rippleton that pops in. He's one of the guys who runs one of the 35 or 36 or whatever it is that's on the list. And we go into all sorts of detailed conversation about how the list is created. There's a lot of different factors to consider before you add someone on a list. Like if I'm running a validator, and I put you on my list, and then it turns out you're some sort of person doing something bad, well, now I could possibly be in trouble, right? So, I need to know that you're not someone doing bad. I also need to know that you're competent in, keeping your server up and running. because if I'm trusting on you, then like I need to trust that your machine works and it's gonna continue working continuously. There's all sorts of different aspects to it.
Got to get those 5 nines right.
Yeah, I mean that, I mean there's other things too. It's listen to the last 2 days chats, because we were talking on Wednesday about could you possibly run like a crowdsourced validator, and then that led into the whole UNL discussion and all of this, and then the last 2 days chats get into that pretty deep.
Yeah,
Thank
and
you.
Rippleton made a good point. Oh, sorry, Michael.
I was just being thankful.
Yeah, Rippleton made a very good point though yesterday about why do we not have XLS20 yet? And so as much as it's 35 UNL nodes that may make the decision, those 35 UNL nodes trust other people, trust other nodes, right? And so if those other nodes, which out of like that 126, I think only like 3% of them are on the yes and have updated their software and are ready for XLS20. Vet, correct me if I'm wrong, but it's like 3%, I think. And so it wouldn't make any sense for the UNL nodes to upgrade and to vote yay, change the network, upgrade the software, and then kick all the other nodes off if they're not ready. And so, they have to take that into like a thought process before any of the UNL nodes would vote yay. Are all of the other nodes that I trust also voting yay, and why not? And what are we waiting for?
Yeah, that was the whole like amendment block part of the conversation. Is that what you're referring to?
Yeah. He. That's you completely right. Yeah, I mean they're because people were not blaming so, but like pointing fingers at the UNL. But they are not really the issue. The issue is actually like all the other nodes, and also a lot of from the validators who are not on the UNL, like the normal ones, so to speak. That they are not really updating, because we have 700 nodes, I think.
Yes.
And it's so much.
You guys, if anybody wants to be mad at anybody, you go look up their validator address, right? Go send them messages with XRP with using memo tags and be like, upgrade your validator already. All right, get them moving.
Yeah, some people have a TOML file where you can see their socials.
Yeah.
Some people don't have even a TOML file. Oh, whatever.
Actually, I didn't want to interrupt you guys, but I did want to ask about the TOML file. That was the first time in that conversation where I heard of that part of like the configuration or whatever. So that's like a hi, here I am, like this is me kind of file, like an identity layer.
Yeah. You can go to xrp.vet slash what is it? I think TOML, yeah, /TOML, and then you can see my TOML file. It's I think I don't know. It's not a JSON, is it? I don't know. No, it's not. But it's a TOML. You can see it, and you can see what's like. There are recommendations what you put in, like where is your server located, where are you located, like country wise, country code you have to put in, what maybe socials, email address, some keys, like I think the public key you have to put in, some stuff that you have to put. Some people put more into than others, but there are some minimums you should put in. Yeah.
Is it basically like how like DNS servers or have unless you pay for the extra money to make it private, they have your info? It's that kind of thing.
Yeah, kind of, because so XRP scan uses the TOML file to verify you, and I think you put in your public key. I have to look your public key into the TOML file. So what's happening now is XRP scan. So the validator signs your domain that you assign. So my validator assigned xrp.vet, and it's included in the code, right, in a token. And XRP scan goes to that address and looks for the TOML file and looks for, I think, the public key. And if it sees the public key is identical with the key, with the validator who signed the domain xrp.vet, then it says, okay, all good, you are verified, and it's just a cross check, I think. And yeah,
I wonder if a cross check's usually a good thing. It's good to double check your math. I made a really expensive mistake not doing that. That was bad. But I wonder if at some point you could, like if I'm running the server and I don't have the TOML file, filled in with the relevant information, if that'll be like maybe you as another validator operator, you won't do business with me. You won't put me on your UNL unless I have a validated TOML file. I mean, that would be like a pretty easy check. I mean, that doesn't mean that I've talked to you and I understand that you're a good person or anything, right? But it at least means like there's some kind of identification.
absolutely. I mean, you have seen what Rippleton was saying. Like, some people put in, what's your motivation? You run that stuff. Cash that I think was suggesting maybe you put in also your your hardware, like what are you running and all that stuff. So you can put as much information as you want into it, and it just only helps the others basically to verify, not verify, but to build maybe trust, like to see, okay, what is the intention of that validator. Because the beauty of it is you don't have to go to Twitter, you don't have to contact anyone, you just go to XRP scan, you just go to the webpage that is linked there /TOML, and you get the TOML file and you just read up there. You could even automate that stuff and parse it to a certain extent what you want. Maybe you want only validators who are located in Germany or in the US or whatever, and then you can get all that information. But small fun fact, I think half of the UNL validators don't even have a TOML. That's really shocking. The other half have, and there is kind of a correlation between updating, voting, and activity of the ones who have a TOML and the ones who don't have. Like if
Yeah,
you have a TOML, you basically already by default kind of active and engaged, so to speak.
yeah, I can see that. That would make sense. I mean, because you got your straight up players, and then you got like all the other guys on the side, right, that are jumping in and out, but they're all anonymous and blah 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 nonsense. And there's probably reasons for that are, okay and fine and
Yeah,
not.
yeah.
But still, if somebody's going to be a real player in the game, they want their name on the jersey, right? Like,
I mean, what they're also apparently not doing, but I have seen many people have done. So I did it as well. You just look what the others are doing, as we humans are. So I looked what other people are doing, and most, or the ones who had a TOML and maintained their validator very good, they had also a validator address, like XRPL address, where you can send funds or whatever. I don't know. But what's exactly the reason? Maybe I don't know. But they had also that public address of a normal XRPL account, also in TOML. So I just also created an XRPL address, which specifically only for the validator, and put it in. Because you can also do domain verification inside of XRPL address, and yeah, you can verify yourself into oblivion with KYC and all that stuff, but you don't have to really, honestly. Just put some basic information. That would be already sufficient, I'd say.
Well, I think I appreciate your comments, Vet, and everybody else. I think it's probably time to kind of wrap it up. We're a little over time, but just, the whole not financial advice thing. For the folks who are speaking, it's not representing Ledgerscale Foundation's thoughts or views, but we absolutely appreciate everybody's participation and questions. And if you'd like to continue supporting our efforts, currently we have the crypto addresses up there, as discussed earlier in this chat. That's not going anywhere for now. The addresses are just there. So if you want to make a donation, it's just going to sit there until we get things more formalized. And we appreciate everybody joining. If there's any last questions, Death, you got anything?
No, I really just I feel the same sentiment. I really thank everybody for coming to this space, especially the people who continuously come and the speakers who come up and provide information, because like I always say, I wouldn't be doing these and I wouldn't have started on Twitter Spaces in the first place if it wasn't for me finding the information valuable that I learned from people. And so I thank you all for continuously showing up, and I love you guys, and I'm sure I'll be on later in different spaces if everybody's around, and I'll see you guys over the weekend and back on Ledgerscale Spaces on Monday, 3:30 Eastern Standard Time.
Thanks a lot also, guys, for spending your Friday to hold these spaces.
Have a nice Friday, guys.
It's a lot, useful. So thanks, guys.
Yep. Love you guys. Night, everybody.